In the last class, we just started with commercial bill market or discount market. So here we deal with commercial bills or bills of exchange. And it is a bill which is a written instrument containing an unconditional order. And it is signed by the drawer, and the drawee has to pay a sum of amount to the drawer on either on demand or after a fixed period of time. There are different types of bills, like a demand bill, which are payable immediately when they are presented to the drawee. There are usance bills, which we don't have to pay immediately, but you have to pay after the expiry of time specified in the bill. Then there are documentary bills, which are bills accompanied by documents of title of goods. And there are clean bills, which is not accompanied by such a title of goods. And there are inland bills, that is within the country, foreign bills, export and import bills, trade bills where there is a trade taking place, a buyer and seller are the parties, and there are accommodation bills where there is no trade as such, but to meet the financial needs of one of the parties. So there are different types of bills in the bill market. Now this commercial bill market can be divided into two: discount market and acceptance market. In discount market, the bills are discounted like by financial intermediaries like banks would discount it. And in acceptance market, these financial institutions provide guarantee for such bills. All right, they provide guarantee so that as they stand as a guarantor for the entities, especially in case of import and export, the bank stands as a guarantor for the importer. Importance of commercial bill market. The first is high liquidity. So here these bills are highly liquid because they can be converted into cash immediately. That banks would discount these bills, and further these banks can rediscount it with the central bank. The second thing is certainty in payment, that usually these bills are accepted by the business people who would honor these bills on the due date. All right, they would honor it accurately on the due date. Third is self-liquidating in character. So usually these bills have a fixed due date, so it will get self-liquidated on that due date. Ideal for investment. So the commercial banks can invest a surplus money in these commercial bills. That is when they provide the discounting facility, they get a certain percentage of profit on that. Next is quick yield. So these are very short-term instruments. So even if you invest in that, you will easily get back the amount. Next, control. So central bank can control the money market by manipulating the bank rate and discount rates. All right, this is one of the important methods for monetary policy. Next is more elastic monetary system. So whenever there is a requirement of funds in the economy, the banks would rediscount these bills with the central bank and increase or enhance the supply of money. So it will help to create a more flexible monetary system in the country. Certain limitations of bill market is that lack of bill culture, that is, bill is not so popular in India. Business people prefer cash credit and overdraft, such facilities, to avail funds. So it is not so popular in India. Second, no rediscounting between banks. Rediscounting between banks is not possible. Financial institutions can, like your LIC, GIC, can rediscount general trade bills of commercial banks, but between banks it is not possible. Absence of secondary market. There is no active secondary market for bills rediscounting facilities. You can see for all the other types of instruments, you have a proper secondary market. All right. You learned in the earlier chapter about primary market and secondary markets, right? So here we do not have an active secondary market, and these are limited to certain centers, or they're restricted to apex financial institutions, right? Like you saw LIC, GIC, RBI. Next, no proper development of foreign trade. That is, foreign trade is comparatively less in India. So these bills are usually used to facilitate foreign trade. So therefore, since foreign trade is less, the demand for such bills is also less. Domination of indigenous bankers. Indigenous bankers are not much involved in discounting bills. So the volume of bills discounted by them is very small. Next is cumbersome procedures. That is, the procedures involved for discounting and rediscounting is kind of very complicated. Next, commercial banks' attitude. Commercial banks are not actually using these bills of exchange to provide credit to the customers, like as I told earlier, accommodation bills, etc., where there is no such trade, but you can use it for meeting some financial requirement of one of the parties. So, bills of exchange are not properly used by the commercial banks, and they are not showing much interest in rediscounting these bills to with the RBI also. So that is one of the limitation. Absence of specialized institute. There are no as such prominent discount houses and acceptance houses in India. So that is also one of the limitations. So these are the limitations of the bill market, specifically in India because of its lack of proper structural development.